Welcome back to my channel. My name is Timmy. Today we are going to be talking about how the simple ways in which you can invest your first $500. I want to thank everyone that has actually subscribed to this channel, everyone that is watching the videos, everyone that is commenting on the videos. I want to really appreciate you. On this channel, we talk about self-development. We talk about personal finance. We talk about wealth creation and management. We talk about retirement planning and investing. If this resonates with you, if this is something you're interested in, please stick around, subscribe to the channel, and click the bell button so that you can get notification all the time that we release video on this channel. So we go to the topic of the day, which is how you can simple ways in which you can invest your first $500. You don't need to be an expert. You don't need to be a guru in it. Just simple ways in which you can invest your first $500. So we're going to categorize it into three categories. The first part is the low risk investment in which you can invest your first $500. The second one is the medium risk investment. And the third one is the high risk investment. So you can choose your battle. The first one in the category of the low risk investment, we have the government bonds. What are government bonds? Government bonds are debt securities in which government says, please borrow us your money so we can use it to construct roads, we can use it to build hospitals, we can use it to pay the less privileged, and invariably we pay you back your capital and your interest. These government bonds in some countries is paid biannually. Your coupon, which is your interest, is paid semi-annually, and in some countries it's paid 4 times depending on the type of bonds that you have bought. Government bonds are actually low. One of the benefits is that is low risk, and your capital is guaranteed. Your interest is also guaranteed back, and it can be a source of retirement income for you. For you to say, okay, let me invest in government bonds, and consistently over time, maybe every 4 months, maybe every 6 months, you are paid something back, which is a form of cash flow for you. And also your capital is also secured and your interest is guaranteed back. The second one in this category is the treasury bills. What are treasury bills? Treasury bills are also government securities. Unlike the government bonds can go on for 2 years, can go on for 3 years, can go on for 5 years, can go on for 20 years. But treasury bills only within a year. We have one that is for 90 days, 180 days, and 365 days, depending on the investment, and also is discounted. That means that your interest is paid upfront. Once you invest in the treasury bill, your interest is paid for you upfront. What are the benefits of this? Your capital is guaranteed back. Your interest is also guaranteed. You can use it to pay for, maybe you can use it to pay for your rent, or you can use it to pay for school fees. It's something that you can strategically invest in and say, okay, this I'm investing in this, and I know that my interest is coming at so time. I can use it to pay for my bills and all that. Those are treasury bills. It's also a low risk investment, and you don't need to. It's not something that you do and you'll not be able to sleep. And also in that category, we also have money market mutual fund. What are money market mutual fund? Money market mutual fund is like a pool of investment in which so many people gather money together and give it to a fund manager, and the fund manager invariably invests their money in maybe commercial papers, invest their money in treasury bills, and invest their money in government bonds. Fund manager actively manage their funds for them. And when there are returns on this investment, the fund manager invariably pays everyone that has contributed into the pool. And most times, money market mutual funds roll over your capital and your interest, in which invariably you are enjoying compounded return. Now we move over to the second category, which is the medium risk. In this category, the first one I would like to talk about is the commercial papers. What are commercial papers? Commercial papers are like bonds or treasury bills. Bonds and treasury bills, the government actually is the one that is championing that. But commercial papers, the corporate organization comes out to say, lend us your money. We want to use it to enlarge our investment. We want to use it for something and all that. They come to the public to borrow money for, okay, 180 days, for maybe 1 year or something. And invariably, they'll pay you back your capital and your interest. But the benefit is that it's usually the interest rate is usually higher than the treasury bill and the government bonds. But the con is that if the advantages of the commercial papers is that if the organization goes down, you might not be able to recoup back your capital. That's that's why it's medium risk. Sometimes it could even be high risk, depending on the kind of organization. So you do your due diligence before you invest in commercial paper to check the financial health of the organization that you are investing in. That this organization, how has it done over time? What are the news that are surrounding the organization at that particular time that they are bringing out these commercial papers? What are the things that are going on in that organization? And also we have stocks and shares in which you can buy the shares of a particular company, a company that you're interested in. Probably you're using their gadgets, probably you're using their consumables. It could be Apple, it could be Procter and Gamble, Soft, it could be Tesla, it could be Amazon. Maybe you're using a Tesla car and I'll be like, oh, I'm using this Tesla car. Let me also buy their shares and all that. It's just stocks that you're interested in their organization, and you do your due diligence to say, okay, if I invest my first $500 in this organization, I hope it will not go down. Is there an organization that has prospect to grow and all that? So you can also invest in stocks and shares. Investing in stocks and shares just means that you are having ownership in that company. If you want to buy maybe $5 there, you want to buy $10 there, you can buy fractional shares in all this company. You can buy maybe $10 for $50 from Amazon, $50 from, can spread your risk over all the company. And also you can buy ETFs. What are ETFs? ETFs is like an umbrella. It's like an umbrella of, instead of buying one share, an ETF can be an umbrella over like 500 shares. It can be an umbrella over like 800 or 5,000 shares. So for you to buy a single stock of 5,000 shares and you won't be monitoring it, it could be very cumbersome. So an ETF makes it easier for you. It's just like an umbrella. If you are buying an ETF, you are buying into so many organizations at the same time. So you can also invest your first $500 in the ETF in which you are interested in. It could be an ETF that is tracking the first 500 largest company in the US, which is the S&P 500. It could be an ETF like that, like maybe a VUSA, a SPDR, or it could be a VUAG, it could be a VOO, it could be an ETF that is tracking all those funds. And also in that category, we also have index funds. Index funds are also like ETF and index funds in which index funds tends to replicate the performance of a certain stock, of a certain trend of stock in the market. Okay, we can have like the S&P 500. You might not be able to buy into S&P 500 directly, but you can buy the index funds that actually track this particular market. You can buy the one that tracks the S&P 500. You can buy the one that tracks the FSTE, because Fidelity has the index funds that track the S&P 500. Fidelity has, Schwab has, Vanguard has. Also next in the medium risk category, we have the REITs. What are REITs? REITs are real estate investment trusts, in which if you are interested in real estate, but you don't have, real estate, it involves a lot of capital and it's not liquid. If you buy a house now or you want to sell, maybe you might not be able to sell it immediately and it involves a lot of documentations. But REIT is just like buying stocks. It's just like buying stocks of the companies that has invested in all this real estate. They've invested in the compartmental stores. They've invested in apartments. They've invested in all these large buildings. Most of these large buildings that you are seeing, they're actually managed by REIT. Most of the storage facilities that all these big organizations are using, they're actually managed by REIT. Most of the residential properties are managed by REIT. So when you are buying into a REIT, you're actually buying a stock. And the benefit of it is you're actually buying a stock of the real estate. And the benefit of it is that it's liquid one. Then REITs by law are mandated to pay 90% of their returns to their investors. So that's why it's a good form of cash flow, it's a good form of dividend income, because most of them are dividend incomes. They pay back dividends to their investors over time. Most of them pay like monthly, some pay quarterly, some pay biannually, some pay annually, depending on the REIT you have bought. And they have high dividend yield. Most of them have high dividend yield, and it's a good source of dividend income. It's a good source of retirement income. It's a good source of generational wealth, because as long as these dividend stocks, these REITs, as long as they are still in your portfolio, they keep on paying the dividend income. They keep on paying dividend income as long as they exist. So it's a good source of cash flow. It's a good source of dividend income. So we now move on to the high risk investment. The high risk investment, some of them involve, in that first category, we have the crowdfunding, in which you can actually invest your first $500 into a company, or into, pulling funds together to assist a startup or things like that. Over time now, we have a lot of companies that are coming out together. Inside even this crowdfunding, we have the real estate investment group. Some of them are real estate investment group that, the one who, probably there's a building to buy, and a lot of people just come in together. You buy your own bit, you buy like 50 units, somebody else buy like 60 units, somebody else buy 100 and 1,000 units. You can also contribute into those real estate investment group as long as you have done your due diligence to know that these ones, they're not going to run away with your money. You know, and next is that in also the another high risk investment is that you can start your business. You can start your own business, fund your own dream, fund your own dream, start your own business. You can start little. You can start with probably your digital product or affiliate marketing or any business in which you have dreamt of over time. You can also start, as long as you believe in your dream, you can also start your business. And another way in which also you can invest your first 500 is to invest in a peer-to-peer lending. What are peer-to-peer lending? Is a way in which, okay, you can lend money to somebody. Either you do it individually or you do it through organizations. Just like you are seeing on your screen, there are some organizations that actually you can invest your money into them. Then they can, having done their diligence with all the people that want, with all their lenders, they can also invest your money into all these lenders. They give them the money, they give them the tuition to pay, they give them the interest also that they will be paid on it, the interest rate and all that. So you can do also peer-to-peer lending. Peer-to-peer lending is also a very good way in which you can also make money while you sleep, because you invest in all these organizations and these organizations make your money to work for you by lending to other people. You can also invest in royalties. Royalty.com is a good way in which you can put in your money, into all these labels and invest in them. It's also a way of crowdfunding anyway, and invest in them, and they also pay you back royalties in return. And also you can invest, in agriculture, you can invest in your dream. So many ways in which you can invest your first $500. This list is actually inexhaustible. It's just where you can also invest in art. You can invest in art. Art is a very good way. I said 10, but I'm sure that I've mentioned more than 10. You can also invest in art. You know, it's a very good way of making money. We have some royal art gallery in this UK that you can invest your money in. You can invest your money in art. Just make sure that with the art you are buying is something that can appreciate over time. You know, these are ways in which you can invest your first $500. The list is just for you to do your due diligence and say, okay, what works for me? Where can I invest this money and I know that I'll get my return back? Is it the low risk investment? Is it the medium risk investment? Is it the high risk investment? Do I want to invest in precious stones, maybe gold? Gold has really grown over time. It's a very good way in which you can invest your money. If you don't want cash flow, you just want to buy gold and let the gold sit down, maybe in the vault or sit down with you in your house and it appreciates over time. I can tell you. There was a time that I bought some of these precious stones, and by the time I wanted to sell it back, I made over 200%, you know, so the choice of your investment, the choice of where to invest your hard-earned money will actually depend on what kind of investment, what risk am I willing to take? Then what kind of investor am I going to be? Do I want to invest for long term? Do I want to invest just to be a trader? Then what do I want to achieve with my investment? Is it just I want to for cash flow or dividend income? Or do I just want to invest for capital appreciation? Then how frequent do I want to be investing? Am I investing weekly? Am I going to be investing every month? Am I going to be investing every maybe semi-annually or whatever it is? Then what risk am I willing to take with my investment? We have itemized all the risk, the low, the medium, and the high risk. So what do I want to achieve? What kind of investor do I want to be really? So these are the things that actually inform your decisions on what type of investment you want to do. It's not about following the bandwagon. It's not about saying, oh, this is good, everybody goes and do it. So it depends on you. What do you want? What are the risks you are willing to take? How much are you willing to invest? Then how long are you willing to invest it? Then what are the things that you want to enjoy in your investment? Is it just the capital appreciation, the share price moving up, or is it that you want to be enjoying cash flow? I wish you all the best in your investment journey. Thank you for listening and sticking around.